It is an exciting time to be here. There is a lot happening on the other side of the world, but there's also a lot happening here in our homeland. A few weeks ago, the Business Council of Australia released a critical paper that we've been working on for 2 years with our members. Now, our members are the 130 largest organisations in our nation. They are our nation's largest polluters. They are our nation's largest financiers. They're also the businesses in Australia who invest more into R&D and to think about the economy both today and tomorrow. The Business Council supports Australia achieving net zero emissions by 2050. We have for some period of time. But what we really wanted to do with this paper was answer the question how. Not whether we should get there, not if we should get there, but how can we get there? And how can we do it in a way that optimises the economic outcomes for all Australians? Now, that's not to mean that there isn't a moral or ethical framing to this particular question. It is simply that we felt that our voice was uniquely positioned to be able to contribute to that discussion on the economic imperative of transition and in plotting a path as to how we get it done. Our members committed collectively thousands of hours in working groups by industry and then cross-cutting groups across the economy to put their minds to this question. But let's start with the basics. The momentum for change is overwhelming. Dermot just talked about a tipping point. We absolutely believe that we're at or moving past that tipping point. The science tells us that the change is happening at an unprecedented rate. Indeed, economic modelling that we had Deloitte Access Economics do for us said that if we don't steer into this change, that the Australian economy will be $3.4 trillion worse off by 2070. Contrast that to the opportunity for Australia, where somewhere in the order of $30 to $50 billion a year in new export revenue could be earned by 2040 if we act and if we act now. Again, look on the other side of that equation. If 14 of our top 20 trading partners have committed to net zero 2050, they represent 83% of our exports. If we do not change the nature of our export base, then we will lose those customers to other nations that will serve them. In Australia, all states and territories have signed up to a net zero by 2050 target. And as Dermot said, New South Wales leading the way, but Victoria, South Australia, Tasmania all have goals for 2030 at or beyond 50% reductions. Importantly, for members of the Business Council, capital markets have moved. Capital markets are incredibly efficient and they move with speed. So when they recognise there is a risk or there is an opportunity, they price it in very, very quickly. Quite simply, if Australia doesn't act and if individual businesses don't act, then capital markets will not be there for them to access themselves of the funding that they need to ensure that their business operations continue into the future. And therefore, many businesses are adopting quite forward-thinking, leaning in targets for their own decarbonisation for 2025, for 2030 and for 2035. And you see that across the membership base of the Business Council. In our paper, we broke the challenge and the plan down into two components, the domestic transition and the export opportunity. Now, these are quite separate because our net zero target is on the domestic transition, but Australia can do so much more to help our neighbours, to help our trading partners also decarbonise by creating new export industries. These two, while separate, are very much interlinked. Australia enters this moment in time in a very unique position. Australia is a wealthy nation that is a trading nation. Our exports, however, are very carbon intensive. There is not another wealthy nation that is as dependent on carbon intensive exports as Australia. Fortunately for us, however, we are also blessed with the resources and the assets that are needed to create new export industries that continue to serve the energy needs of a decarbonised world, but do it in a green, clean and environmentally friendly way. That is the challenge and the opportunity. And to capture those export opportunities requires us to drive domestic transition rapidly. Because as Dermot said, if we aim for a 700% renewable economy, then we have to get that domestic transition happening so that we can go past the 100 up to the 200 and beyond. I said that our paper talked about the how. There's been lots of conversations about goals, and goals to us are very important, and it is very important this moment in time that we have right now, where we have bipartisan support in Australia for a net zero 2050 outcome, and we shouldn't go past that. It has been a torturous path for us as a community to get there, and it is one that we should absolutely bank and build on. But it's not enough. We now need to go further. The 7-point policy architecture that we put together starts at the top with climate targets and budgets. At the Business Council, we believe that Australia needs to sign up for 10-year carbon budgets that need to be reviewed every 5 years, that those targets should be set by the Parliament, but should be advised by an independent authority. We need carbon investment signals. There's been lots of discussions about carbon taxes, around carbon prices, etc. Carbon investment signals help drive action. They help coordinate action. The policy framework is in place with the safeguard mechanism, which has been in place through both Labor and coalition governments. And it is one that should be better utilised to be able to coordinate investment signals. We need to build offset markets. As Grant King, my predecessor and now head of the Climate Change Authority, says, zero is a very small number. And indeed, the cost of those last little bits of decarbonisation is very high, and therefore offsets work very effectively to get us to that net zero position. We need to be investing more in innovation and technology. We need to build low-carbon regional roadmaps, because it is regional communities that stand to gain the most from decarbonisation, but also we're the biggest risk if we don't do it rapidly and well. We need to put more time and effort into adaptation planning. We need to make sure that all of these things are then coordinated, and at the BCA we believe that means the Climate Change Authority playing a larger role. In total, our plan as to how Australia should be getting to net zero 2050 has 63 policy recommendations that we believe will really drive that change. But we have to lean in to more action sooner. Every single economic indicator tells us that if we can use existing technologies that are commercially viable today and roll them out more rapidly between now and 2030, that we will be in a much better position to win those export markets and to make decarbonisation a growth activity for our nation. Deloitte modelled the electricity market going to 85% renewables by 2030. From a bottoms-up perspective, our members put that at closer to 75%. Whatever it is a dramatic increase from where we are today. And that means our total energy mix between now and 2070 continues to transition, where you can see that bar at the top being a decarbonised electricity network, a national electricity market. And that is what enables those green exports to be built. This isn't a 100% plan. To Dermot's point, whether it's a 500, 600 or 700% plan, I've heard each measure, but it is a radically larger, decarbonised electricity network that drives Australia forward. Now, we spoke to our members in working groups around what that means, and let me just touch on a couple of these. For Australia to get to a 46 to 50% reduction over 2005 levels by 2030, and that's what our members believe we can do using existing technologies that are commercially viable today, the heavy lifting is done by the electricity sector. In fact, 61% of the target comes from there, and that does mean a far more rapid rollout of renewables. It does mean that we need to invest in firming and we need to invest in transmission than what is currently planned. Our members, the large electricity generators included, believe that this is very possible. And secondly, 24% comes from the reduction in industrial emissions. This is things like fuel switching, which means that we leverage more renewables off-grid. It does mean that businesses rethink industrial processes and electrify wherever they can. But again, our members believe that that is possible. And what does this all add up to? Well, this accelerated pathway means that the Australian economy grows in net present dollar terms by $890 billion over the next 50 years relative to the base case. It means that dotted line, rather than the black line, which would be our current Paris agreements, or the grey-silver line, which is a late mover path. Our members at the Business Council believe that Australia is very capable of achieving this. We do believe that to get there, we need coordinated action across regulators, across government, and across business, but we have every asset, every skill, and every capability to get there. Thank you.